The truth every trader must know about Japanese candlesticks. Japanese candlesticks are incredibly popular visual tools in the world of trading. Many traders learn them hoping to find a magic key to predict the market's next move. But what if this reliance on isolated patterns is just an illusion? This video invites us to reflect on a provocative idea: the perception that Japanese candlesticks on their own are a lie, not because they don't offer valuable information, but because of how many traders use them, as if they were secret formulas to win every single trade. The problem arises when these patterns are interpreted in isolation. A novice investor might spot a pattern that suggests a price increase and decide to buy immediately. However, the market often has other plans, and that price can quickly fall, leaving the trader with a losing position. It's like trying to guess the end of a story by reading only a single sentence. The key point this video highlights is that Japanese candlestick patterns do have predictive power, but this power vanishes if not integrated into a more complete analysis. They are not standalone signals to execute trades. They need the support of a well-defined strategy. In short, the lie of Japanese candlesticks lies in the illusion that they are infallible shortcuts. The truth is, they are valuable components of a more robust analysis system. For traders everywhere, the message is clear. Don't be seduced by the apparent simplicity of an isolated pattern. Deepen your strategy, combine your tools, and understand the market context to make more informed trading decisions with a higher probability of success. For many, this is the reality of day trading, a 9-to-5 battlefield. It's you in front of the charts trying to decipher the language of the candles. Is that hammer a real buy signal? Is that engulfing pattern the start of a downturn or just a market trap? As we discussed, blindly trusting these patterns is a path filled with uncertainty. They are an echo of the past, a footprint of what has already happened. While you are interpreting, the market has already moved. You're trading with an old map. But what if you could stop guessing? What if, instead of interpreting the past, you could act on the present in a fraction of a second? This is where a bridge is built to a completely different universe of trading: latency arbitrage trading. Imagine it like a race. Companies like Western Pips have developed technology that doesn't play the prediction game, it plays to win on speed. Their software receives price information directly from the fastest sources in the world, milliseconds before your broker does. This tiny delay, invisible to the human eye, is latency arbitrage. The software knows where the price will go in the next instant, not because of a prediction, but because it has already seen the future. It executes the trade before the general market has time to react. This changes the rules of the game. You are no longer tied to a 9-to-5 schedule. The algorithm works for you 24 hours a day, without emotions, without doubts, without misinterpreting candles. It doesn't get tired, it doesn't hesitate. It simply leverages a real, measurable technological advantage. The bridge is here. You can continue trying to decipher the shadows of the past on a candlestick chart, or you can cross over to trading based on the certainty of speed. The choice is between interpretation and information, between human reaction and algorithmic execution. That is the power of latency arbitrage. Discover Western Pips Private 7, the software that professional traders trust to master latency, arbitrage, and high-frequency trading. Elevate your strategy now at westernpips.com.
Buy Western Pips now, and let's start your journey to trading profits together.